All right. Welcome back. Let's pull up the SGX for you and take a look at how that's doing this morning. Remember, as Ash has also been talking about, some of the cues are pointing to slightly cautious sentiment or mood, or perhaps just logic today when it comes to trade in terms of the way some of the indicators are shaping up. A 0.5% downtick is what we're looking at. Ruchit, Jain, Chandan Taparia joining us this morning as well. Ruchit, let's just start off with you. We've been tracking a range and resistance at 7,900, but do you now feel some amount of weakness setting in?
Good morning, Abha. Well, overall, I think we would still continue to trade in this range of 7,700 to 7,950, 7,960 on the high side. We have not seen any directional momentum coming in. Whenever we see last, I think 15, 20 trading sessions, the markets correct, we see some good buying in coming in from lower levels. And whenever it comes to around 7,950, 7,940, we see some sort of profit booking coming in at higher levels. So unless markets come out of this range of 7,700 to 8,000, I don't think there would be much of directional momentum coming in. Now the question is that everyone in the market knows that this range has been built. The next move is where would the next move be, whether it would be a breakout on the upside or breakdown from the support level. I think that markets in near future will give a breakout on the upside from this zone. The reason being that if you see the previous trend before this consolidation, then the short-term trend was up since the day of the budget. We have seen some higher top, higher bottom formation from lower levels of 6,800. After forming a higher top, higher bottom, the momentum readings were in overbought zone, and that's why markets are now consolidating. Now, there are two types of correction in which generally when momentum readings or RSI comes in overbought, markets correct either price-wise or time-wise. It's good that we are seeing this time-wise correction where prices are going sideways rather than correcting in prices. So I think once this time correction is over, market would resume its previous uptrend. And whenever markets are coming down from its resistance of 79.50, we are seeing some good amount of buying coming in again at lower levels. So the bulls are defending the lower levels quite well. And from here, I think once this range-bound trading session is over, we would see a breakout on the upside. And short-term traders who have a view of 15-20 trading sessions or from 1 month perspective, any dips, as even today it is indicating by SGX Nifty, any dips again around 77.50, 7,800 range, that should be used as a buying opportunity.
Chandan Taparia, good morning. So I need to ask you on the futures and options side, because here, Chandan, people have serious margins, right? So if they go wrong, then they lose money seriously. Now, Chandan, in the last 4 or 5 trading sessions, it's become impossible to make money because you go long, market goes short, you go short, market goes long. What do we do right now, Chandan? Can you only pay some kind, we'll use strangle and straddle, but basically a position out of the money on the long side and maybe one on the short side? Is that the way to play the market now?
Yes, very good morning. Market has been consolidating in a range from last 13 trading session of this May series. It is continuously witnessing buying interest at the support zone of 7,700, 77, but at higher side, it has marked multiple hurdle, and because of that, in the absence of follow-up buying interest, it is again coming down. If you look at the volatility index and the other option database, market is still indicating a range-bound move for next coming trading session, because on higher side, 7,900 and 8,000 calls have seen the huge open interest addition. 8,000 call is having open interest near to 80 lakh shares, and whenever we see the open interest of more than 85 lakhs in any strike, hardly market moves beyond that strike on the expiry closing basis. But on last trading session, market rallied by around 60-70 points. We have seen some put writing at 7,800 and 7,900, which again indicate that support-based buying is being witnessed in the market. If you look at the volatility index, that was down by around 4% yesterday and was near to 16.7 levels. And if you look at the entire movement of the series, the Nifty is up by around only 0.5% and trading 70 points above from its volume weightage average. Whenever market moves higher than or the lower than its volume weightage moving average, then only we may see the volatile swing towards expiry. But the volume weightage average of the entire month is near to 78.30, and we are just 60 points away from its volume weightage average. So if market corrects, this volume weightage weighted average of 78.30 is likely to provide some support. So the strategy should be buy if it comes near to 78.30, 78.40 kind of zone by keeping the stop loss near to 77.80. Now talking about the option trade, as the volatility is cooling down, we are hurting from the time decay. So most of the premiums are going to be declined in the option segment. That's why the reason that in last conversation also we have suggested to go for the bull call spread in the view that market is finding support at the lower side, but upside it seems to be limited because of the multiple hurdle and the writing at higher side. So this is the only strategy which can traders apply, can go for buying 78.50 call and sell 8,000 call with the view that market is likely to find support near to 78.50, while 8,000 is likely to act as a crucial hurdle for the market. Talking about the hurdle zone, if market manages to sustain about 79.20, then only we may see a move towards 79 to 8,000. But as of now, I am not expecting much move beyond 8,000 levels.
Chandan, if I may ask you this, let's say the market doesn't sustain. Let's say we drop below 7,800 or 7,750, whatever technical level you want to take. What happens then? And let's say it happens before the settlement ends. I'm looking for a backup kind of a strategy that, if we just can't maintain the ranges, then what is the strategy and we will close their positions?
See, what I suggest, the market is rallied well from the budget day. It has rallied by around 1,200 points, and now it has been witnessing some consolidation. And interestingly, most of the times in last 45, 46 trading session, the index has taken multiple support near to its 50-day exponential moving average and turns back. Now the question is that it is trading in a range, and if it happens the range breakout, then that might attack the next leg of rally. Premiums are at lower levels because of the lower volatility, and the expiry week is now happening. So definitely those who are holding the position can hedge with the protective puts. One can look at 7,900 put, which is trading near to 72 rupees, or one can go for 7,800 put, which is trading near to 38 rupees. So those who are holding the long position and not interested to get out from the system, in the view that sustained buying is being witnessed in the market, better to buy 7,800 protective put by paying the 35 rupees. So at least if market corrects, your position will be hedged and upside will be open if market moves on higher side.
Okay, let's talk about the Bank Nifty as well. Ruchit, how's the Bank Nifty looking? And also specific stocks there that continue to be top of mind. Some of the PSUs, SBI, PNB. Let's take a look at some of them as well.
So Bank Nifty, similar to Nifty, even we have seen some consolidation in Bank Nifty. Major hurdle for Bank Nifty in near term is around 17,020, 17,050 levels. So unless we see any breakout out of the 17,050 resistance, I think some sort of consolidation would continue in Bank Nifty as well. Now, what we have observed in last couple of months in this uptrend, in this short-term uptrend, which we have seen that the private sector banks have been the leaders in taking the Bank Nifty as well as Nifty up. Now, the weightage in the Bank Nifty of private sector banks is much more than PSU banks. So even though the PSU banks are not doing well, the private sector banks have held up the Bank Nifty, and I think as of now there are no signs of weakness in private sector banks so far. Amongst the PSU banking sector, I think still there are a lot of short positions in there in PSU banks. So one should not be in a hurry to do any kind of bottom fishing in PSU banks, except in case if we see breakout of the 17,050 resistance. Then we may see these shorts getting covered, and which could pull up PSU banking space. So PSU banks, one should clearly wait for breakout of Bank Nifty. Only about 17,050 is crossed, then only some buying position should be built up in PSU banks. Now coming on to stock specific amongst the PSU banks, I think SBI has been much in news in last couple of days. On the lower side, I am not expecting much lower levels in SBI. We have seen during this up move in the first week of March, we had a good gap up opening in SBI, which was around in the range of 158 to 162, 163. So I think that range would act as a crucial support. So around 170, I think if the stock comes, it would be a good buying opportunity, 168 to 170 range. From there, I think again the upside momentum should resume in SBI. So in spite of if there is any negative opening or any negative development happening in SBI, any dips around 168 should be used as a buying opportunity.
Okay, fair enough. We'll come back and talk a little bit more about some of the main stocks in news. We've got a couple of others that have been looking good on the charts, even a Maruti, for instance. We'll get Chandan's take on that, but after this very quick break. Welcome back. We're counting down to pre-open, a couple of minutes to go. So let's get some strategies going. Chandan, a couple of the stocks on your list were actually starting to look interesting yesterday on the charts. Maruti, IGL, for example. So let's just run through some of these names and why they're looking good to you right now.
Yes, we have seen the range-bound move in the market. Market fell to all the higher levels, and because of that, the range-bound move likely to be there, and selective stocks have potential to outperform. Now, talking about the Maruti, the stock has given a price breakout after the recent consolidation phase of last 15-20 trading session. Earlier, it was finding hurdle near to 39-20 kind of zone, and now the way it is managed to hold those zones with fresh built-up of long position indicates that up move may be seen in the counter. We have seen some fresh put writing at the lower strike. It has added open interest, and now the short covering also may indicate the positive move in the counter. Overall, we are looking the positive sense, so recommending to buy with a stop loss of 38.80 for the target towards 4,025 on the higher side.
Right, Ruchit, I've got a number of stocks. I'm just going to read a few, and if you have looked at them on the charts, perhaps you could share what you think. A number of hotel stocks ran up. Advani, Taj GVK, Viceroy, Asian Hotels, Indian Hotels. Then we had stocks like Tata Metallics, Tata Sponge Iron, Tata Investment Corp, a lot of the Tata stocks, then Maithan Alloys, Store One, MP Distilleries, India Bulls Ventures, Andhra Sugar. Any of them that have been on your radar?
So hotel stock specifically, we see then, it was one of the day yesterday when suddenly some spurts in the volume came in and prices went up. Usually the volumes in these stocks are very less. They are not that liquid stocks that from trading perspective, it's very difficult to catch each and every momentum in this. But of late we have been bullish on Tata Metallics, the name just which you said. The stock recently has started forming this higher top, higher bottom formation, and the volumes have started coming in this stock also. So I think on the higher side, there is a good potential in near term for the stock to reach up to 152, and in case 152 is crossed, then its all-time high level of 175 would also be reached in the stock. So we are quite bullish on Tata Metallics. If we get any dips in this stock due to correction in the markets, then I think one should, among all these mid-cap stocks, one should use these as a buying opportunity in Tata Metallics.
Okay, let's take a look at those pre-open quotes. There is a downtick today. It's not a slide yet, Ashu, but 78.59. SBI is quiet so far. I'll pull up some of the other banking names as well. Take a look at some of them. ICICI is a little bit in the green today. Axis continue to see a bit of an uptick. We saw some movement in those capital goods names yesterday, and ONGC. We'll see if any of them are still on the upside. Other than that, what was quiet was essentially, on the downside, we did see, for instance, Pharma sit out, Eicher Motors, some of those Tata Motors, some of those kind of auto names, and Reliance, of course, was quiet yesterday as well. So for now, it looks like some of those trends just seem to be continuing.
Right, Abha, it's human nature. When we are rich, we don't ever think we are going to be poor. When we are poor, we never think we're going to be rich. So that's what's happening with the market. It's gotten used to a trend. It thinks it's not going to end. So what I'm saying is good traders understand that, it's no use trying to figure this kind of stuff out. Well, if it sustains, great. But the data is overwhelmingly against the market. Now, because we have a FNO settlement coming up, maybe that's a possibility. But I'd still say that, the odds or the risks have increased. But we'll take a look at a couple of stocks. Yesterday, ONGC held up the market, actually the whole oil pack. We'll see if that's where the action is. So, at the moment, the quote is showing fine. And if you have a Reliance Industries, you can take a look at that. Reliance has to hold if the index is going to eventually hold. And then State Bank of India, if we can bring that one up. So early quotes, Shava. Let's see when the market opens how the general feel is, and we've seen what kind of volatility we run into through the day.
Okay, we've got Dhaval also joining us on the currency. Dhaval, it's still at about, it's inching towards 67. So we have gradually seen that downward pressure building up on the rupee. The dollar continues to be at a high. What's the outlook on the currency?
Yes, good morning to all viewers. As of now, since we are continuously since last 1 month, pair is strictly moving in a price band of 66.20 and 66.85, and it is being clearly waiting for one of the big event or big such a kind of events which will give the trigger to the equity as well as currency. And if I'm not wrong, then I'm finding currently US 2-3 very good numbers, especially retail sales as well as CPI number, and 3-4 Fed members have also commented there is a possibility that Fed may go for rate hike in June month. And on the simultaneously secondary things in our market, we have seen little bit negative data, CPI number as well as the industrial production number. So clubbing both the things together, I believe we are already at the breakout level, and we may see 67.50 or 67.80 mark very soon. And in fact, going ahead, I have just recently published one of my report as well, under which I have mentioned that there are lots of uncertainties in the market, especially British exit, Fed interest rate hike, or I can say Japan uncertainty and everything. So probably overall, rupee, I believe, continuously will remain under pressure only. 66.50, 66.60, I believe, which will be look like as a bottom, and where importers, I believe, if suppose we get going ahead, then definitely it is a better level for importers to cover that level.
All right, thanks for that, Dhaval. Quick check on the currency coming in there. Okay, so we've been talking to our guests and getting some of their strategies going as well. Ruchit, let me just get what you're tracking as well this morning before we head further.
Yeah, so I think if we get a good gap down opening today in the market, it would again be an opportunity to buy as there's going to be good stock specific momentum, which we have already seen since last few days. We are positive on GAIL even at current levels. We have recently also initiated buy in GAIL. It had recently broken out its resistance of 370, 372, and on pullback rallies we have seen that resistance which was broken has now acted as a support. So I think this positive momentum would continue in GAIL, and on the higher side it has potential to go up to 404 in very short term. So even at current levels one should look to buy this stock, keep a stop loss below 361, which is the recent low, and target of 404. Second call that we have been recommending is a buy call in HPCL. This stock has recently formed a higher top, higher bottom. In fact, if we observe the weekly or monthly charts, then the trend resulted in HPCL, BPCL continues to remain up. And now after a consolidation of sideways, the stock yesterday had given a gap up opening. This is a positive sign that after consolidation, the momentum has continued in favor of the broader uptrend. So I think this uptrend would continue, and the stock would go up to 885 maybe in next 8 to 10 trading sessions. So with the stop loss below 819, one should go long on HPCL and for target of 885. And amongst the mid cap, we are recommending a buy in CESC. The stock off late has been consolidating sideways. The moving averages are the moving average crossover systems are showing a continuation of the uptrend. And once the stock takes out above 544, 545, I think the momentum would be quite sharp on the upside in this. So if the stock manages to go above 545, then buy this stock, keep a stop loss below 519 and target of 565.
All right. Thanks for that, Ruchit. We'll just talk about some of the other stocks as well that we're looking at. We've got Ashutosh on the phone line. The government has formed a 5-member panel to review the FRBM Act. Some of the things they'll examine is, for instance, having a fiscal deficit range. Ashutosh is going to run us through a few more. Ashutosh, what's on the agenda?
That's right. The government has announced setting up of a panel to review the FRBM Act, and the two very, very important mandate that has been given to the panel is to look at the feasibility of this particular panel, see how the FRBM Act has actually worked in the last 12 years. And the one very important thing over here is that the panel has been asked to look at whether we can have a range of fiscal deficits, so to say. The government had been in practice of announcing one figure for fiscal deficit every time in the budget. But this time around, as we know, there had been a very, very animated discussion in the finance ministry before the budget of whether we should stick to the fiscal deficit target or we should go ahead with the public investment and expenditure to stoke growth and relax the fiscal deficit target. So there had been a very animated debate this time around, and this is precisely the reason why this particular panel had been formed by the government, so that these issues could be looked at. So there are these are some of the various factors that the panel will be looking into, and it will be submitting its report by October this year.
Okay, thanks for that, Ashutosh. I'm just going to check if some of those pre-open quotes have started to come in. I think we're down about 0.5% in pre-open. Tata Motors, BOB, ICICI, some of the names there, Infi, HDFC, Axis, ITC, BHEL. So it does look like the banks are going to settle in for some weakness today. On the upside, market breadth is incredibly weak today. Only Coal India and an Ultratech in pre-open that are seeing just a spot of an uptick. Otherwise, it's looking weak, Ashu, as you were discussing earlier today. Definitely headed for a bit of a downtick.
Right. My only hope is that the market can find a direction. See, anytime a market goes into this kind of volatility, it doesn't help anybody. If it's got a down direction, I'm sure there are tons of stocks to go short on or do something. If it's got an up, but right now, what we are seeing in the last 4 or 5 trading sessions is excessive volatility on a day-to-day basis.
Okay, I will also introduce Natasha Shankar and Mohit Gaba, who are also joining us in studio this morning. Thanks for being with us. So let's get started. I mean, it's, Mohit, let's get some levels in first. Looking pretty weak today. Not only did we not manage to sustain 7,900 yesterday, but this morning, wondering how much worse it's going to get.